a lot of institutional investors, pension funds, governments, and a lot of retail investors are just blindly putting everything into these, thinking, well, it's the S&P, it's the top 500, it's diversified. But as people bid up the prices of these tech stocks, their market caps weigh more and more and more and
See,
more in that portfolio.
I'm still confused. Like a big pension fund is not buying an ETF. A big pension fund is picking stock, or they're picking bonds, or
A,
they're doing their own weighting.
a
And
lot
so
of
if
them are in the S&P.
The S&P 500 is what's called a market cap weighted index. That means bigger companies have a bigger influence on how the index moves. Investors measure market capitalization by taking the number of shares a company has issued and multiplying it by its stock price. Therefore, if investors are driving up a stock's price, that can increase the company's market cap, which will then increase the company's weight in the S&P 500. That's one of the reasons why the S&P 500 has become so heavily driven by AI and tech giants.
Nearly half of the S&P market cap has medium to high exposure to AI, according to Citigroup's estimates. So what that means is that a lot of these companies in the index have put big bets on the emerging technology that's set to come out. The question is, will those bets pay off?
People are really optimistic about these companies, which is driving up the stock price, which is going to continuously increase the market capitalization, which will increase the market weight or the weighting in the S&P 500.
But because of the surge in AI enthusiasm, the S&P 500's performance now increasingly tracks a few very large tech stocks. The median stock in the index has risen less than the top performing tech stocks.
Over the last few years, the vast majority of the earnings and revenue growth that we've seen in the S&P 500 have come from tech and AI more specifically.
To some investors, that kind of concentration looks risky, but others see it as a sign of strength.
I think it's a great thing because right now the biggest asset in the US, when you think about across the country, it's Silicon Valley, it's AI, it's the arms race, that we're ahead of China. That's why you're seeing, even on S&P, the additions continue to be new tech, next gen versus maybe old legacy. And that's a positive as this continues to play out.
I think the video is a little bit misleading. It's talking about, the S&P and it's weighted, and if you invest in it, you're going to be big trouble. But Joseph, can you actually buy the S&P?
I don't think so. The way that those ETFs work is
No, that's an ETF, but they're not talking about that. They use ETFs as a solution.
Yeah, to buy, you cannot go buy it. You would have to buy each of the 500 companies and do the calculation yourself. So you'd have to to go.
How it works?
That's a big pain.
Who will check what you buy? So if you
it's impossible.
Did I buy all of them?
In the past, that wasn't it wasn't feasible to do that in the past because you had transaction fees like $7 or $10 a trade. I'm old enough to remember that.
Right. So
trading wasn't always free. Now you could feasibly do your own. You could buy 500. You could set up a account to buy and sell and reweight the stocks every day with no transaction fees. So every day you could sell off and rebuy the top 500 companies with the algorithm.
Yeah, the amount of money is totally prohibitive. That's why like this is why the democratization. You can't buy 100 shares in NVIDIA, 100 shares of Google.
No, you would buy one share. You would buy one share and of each at the percentage that you would take, how much the market cap of each stock is and divide it by the total market cap of all 500, and then you would buy a fractional share for each company, and you could very easily set up a computer program and auto robo portfolio to do that for you, and to do it every day, to sell and reweight it every day and rebuy and resell at the end or beginning of every trading day. It's a pain. It's a lot of bookkeeping and Alina.
Question from the beginners and like students question. Okay, you said I should have like an account, so I should subscribe to have a possibility to buy shares in S&P. So it's just some system where I just come and just subscribe and then buy and just choosing how many shares I want to buy. And
you could do it in a spreadsheet. Like, it wouldn't be hard. This is publicly like I could write you a script like in 2 minutes
it's okay,
to do it.
we discussing that it must have mandatory to buy at least one share each of them.
No, no, you can buy fractional shares now.
Okay, well, so if you're gonna like I did the math on chat. If you want to buy the S&P, the 500 companies, and put a minimum of like $1 in, it'd cost you $80,000 to $100,000.
$1 into each, but I'm saying
Yeah.
you don't have to put $1 into each.
Well, let's just big number, like 100,000.
You could put $1 into the whole
The
thing.
minimum amount is 80. Minimum amount.
You could put $1 into the whole thing with fractional shares, right?
Oh my. No, I think
well,
it should be some minimum something amount. It could
or
have
whatever, a
cents.
few hundred. People are doing that. You could do it yourself.
So you could do fractional, you could do $1, but the actual relative movement will be the same, right? If it's like
Yes,
225. So we're talking about just the return on it. That's what they're trying to talk about. The returns could drop. So it doesn't matter if I buy fraction or I buy $1, but you know, the thing that's tough is that they say that, but they're not telling you that that's not what they're telling you to do. Like no one has like a weighted percentage that they're managing
No one's
themselves.
doing that because
nobody's doing that. No.
Even for people that are tech savvy and do finance every day, that's
so
why
what
would
are
you
they
do that? You can buy a ETF like SPY and the
but let me ask
ratio
you,
is.
I know you can get VOO, which is something, but why are they warning us then?
Because
what's the scam here? Don't get excited by
it's no scam.
S&P.
The warning is that as everybody gets more and more excited and it pumps up the price of tech stocks into potentially a bubble. Some people say bubble, some people say the growth is justified.
They're saying the S&P specifically. They're not talking about individual stocks. They're warning us against the S&P. But why are they doing that when we're not investing directly in the S&P? Like, what are they saying?
They're saying because most people are directly invested in these ETF funds, these SPY and VOO ETF funds that have very low expense ratios and that track, instead of you buying 500 slices, they do that and they charge you 0.1% or whatever. And a lot of people and a lot of institutional investors, pension funds, governments, and a lot of retail investors are just blindly putting everything into these, thinking, well, it's a S&P, it's the top 500, it's diversified. But as people bid up the prices of these tech stocks, their market caps weight more and more and more and more in that portfolio.
I'm still confused. Like a big pension fund is not buying an ETF. A big pension fund is picking stock, or they're picking bonds, or they're doing their own weighting. And
a lot of them are in the S&P.
No, what do you mean they're in the S&P? They're individually.
A lot of them are buying S&P 500. They might have a better expense ratio than you or I have access to.
No, but they're not buying. There is no S&P to buy, right? The S&P measures the performance. What are they buying? Aren't they buying individual stocks just like
ETFs? A lot of the ETFs.
I don't know. It's warning me against something, but I think it's almost just for clickbait, saying AI. You got to watch out for AI because AI is now a component of NVIDIA, and NVIDIA's AI component is not, they have other businesses, right? They do chips, to break out the AI piece to it is difficult. And also, I mean, NVIDIA is only 7% of the S&P. So they're just linking like people's fear about robots killing them to like, you're going to be poor. The robots are not only going to kill you, but you're going to be poor. It's just like, okay, well, I guess I would say pick your argument. Which one? Speaking of which, Roomba's going bankrupt, the vacuum robot. So.
But
I think we should invest in companies and services which support AI technology. All this cool calling equipment, because it's all database servers and everything. Because to support AI technology, you have a huge power, and power is like
that's what
hardware, not software. Hardware.
So they're looking at the supply chain now, and they're going, okay, great, you have AI. It's going to kill you, but then again, you need power. So we don't even have nuclear. We need nuclear power.
Nuclear power, any kind of power, and some technologies like it means that AI is software, but hardware is the basic. Without hardware, AI just dead.
Joseph, you gotta explain it to me. I'm confused now about this S&P. I thought, like, holy shit, we're all gonna die. Robots are gonna kill us.
I read in Wikipedia that S&P, it's like a, oh my God, it's blah blah, a division of S&P Global, leading provider of financial market intelligence. Okay,
it's intelligent.
And in my view, in my knowledge before this meeting with you, I think S&P is just information which you can come, review, see, and make some decision for investment. And now It appeared that I can use and even buy stocks via S&P account. Is it
ETF,
true?
yeah. Yes.
ETF,
You
yeah.
got an ETF.
I think it is
That
only
tracks it.
tables and this, and now it's like just can register and buy something. So they just provide high quality financial information. They said, hey, be our client. We want percentage from your incomes.
Yeah, so I have one of those. I have a JP, which is a covered call that uses companies within the S&P. They write covered calls against those companies. So when the S&P starts tracking, the covered calls, that's how they get the income coming in. It's done okay. I mean, I'm going to tell you, it's give and take, right? But
it's one of the safest option strategies because
yeah, I mean,
you have to own the shares to write the calls.
That's right. That's right. So they own the shares. They write the covered calls. If there's a appreciation in the stock, I mean, they get to monetize the calls and the contracts, and I make money. So, but you can see how even like all of us, like to unpack and unravel some of this stuff sometimes takes time. And I can only imagine somebody who's busy with, family and they don't even care and they're putting their money into something like I think you got to slow down and even like unravel this thing, or else you're going to be one of the people that's going to be on the down of the pop of the bubble.
I mean, I had an insight the other day because I do little fun for my kids too, right? So I do my stuff and then I do my kids stuff. And I was, chatting with GPT. I was like, what do you think of this portfolio? Because I decided to take a more passive stance with the kids because they're, young. And so the horizon is 40 years or whatever more. And I was like, well, what do you think about this? I'm thinking of putting this in bonds and this in the S&P and this and it came back. It was like, well, the S&P is not that diversified, so you should try this and this and this. And then I started looking into it. And I said, oh, there's this other fund. There's Vanguard Total World Index, VTI, and there's a few other, products like that. Every stock in the world, and it's not every stock, but it's like,
Yeah.
Every country's all the main countries represented, all the industries. And then I started doing that, and then I started talking to GPT some more, and it's that's not even diversified. There's another one called VT. So VTI is weighted toward US total world, but is skewed toward US. VT is actually emerging market, and so you got to have both of those. And it's like, wow, diversification even within buying everything. And I mean,
Yeah,
those are not like S&P. Those are like you're buying everything.
Yeah, it makes you just want to like buy real estate, or I don't even know. Like it's just so, layer upon layer upon layer, and
I don't want
just like,
those headaches.
Yeah,
I've been there,
I mean,
been there, done that.
or just get gambling, man. Let's do NBA gambling. Let's just do that, like card games. Like, who cares?
Oh my God.
Yeah, oh my God. All right, so that's it. What else?
Okay, one more because I'm still confused. I just it's not ChatGPT, it's Google AI. Anyway, and I asked, can I register my investment account and S&P website? And he said, no, you cannot register an investment account in S&P Global website. It's just a stock market index that tracks the performance, not an investment platform itself. It invests funds, blah 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 blah.
Yeah,
you must open a brokerage account with a financial institution. Once you have this account with a provider like blah 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 blah.
Yeah.
We don't advertise.
So there are brokers that let you automate the buy sell process, so you can write a script or
replicate the S&P's performance.
Yeah, you could set up some rules to do exactly what they're doing and just follow. But you'd have to follow all the companies and constantly see who's getting bigger and who's getting smaller and reallocate your portfolio every so often.
But again, why I should buy all 500?
Diversification is the idea. Yeah. So
and who told it? Who said it? Is it like a proper strategy that?
I mean, we learned that in Boston, idiosyncratic versus systematic risk,
changing.
Right?
You see, the new nuance appeared. Like, okay, top 5 is technology company, similar, using AI investment, invest in AI research and development. It means maybe this is the reason, as Iswar said at the beginning, don't invest in top 5, just a few, and see some other field like farmers, hot dogs,
corn dogs.
Don't put all your eggs in one basket.
But
everybody knows that. And mathematically it's to do with correlation and covariance. So as one stock goes up, another might go down, or vice versa.
Yeah,
some
but
some
if I
industries
follow
tend to move
500
together.
S&P, if I follow 500 S&P, my higher investment will be in the top 5, and it's all technology. So now it doesn't work anymore. Okay,
and
let's
that's the
keep top
risk.
5 and start to diverse my investment on the something on the bottom.
What did people do in 1960? I mean, they smoke weed, but like, what did they do? Were
Flying
they
to the moon?
like,
Well, I mean,
moon?
you didn't
What
have
were they doing?
you didn't have like
You
the
didn't have nothing.
the
Shit. You had corn
the
dogs.
platforms. You had huge transaction fees, and stocks were papers and bonds were papers, and like
coupons.
I guess
Yeah.
what you
Wild.
say, what did they
From
do
Wall
in
Street, yeah.
1999 is maybe more apt question. Like
Yeah, what
because
did
there
they
was
do?
still like transaction fees then. So and there weren't ETFs. ETFs are a more recent product.
I think mutual funds. They had mutual funds
They
back
had mutual
then,
funds, and those
Yeah.
were a bad deal because you would be
Yeah.
paying like 2-3% in fees. So any
Yeah.
advantage they got you,
Yeah.
is eaten away by the fees over time.
What a
It's
wonderful
a great
time we
day
live
for
in.
investors. This is the
So
best
that's
time to be
awesome.
alive as an investor.
Like all this pessimistic, oh, Nvidia is worth 5 trillion. We should all be scared. They're gonna kill us. Like, wow, 5 trillion? Like that's unbelievable. Like,
It's
okay, let's
gonna
make
go to
some money.
10 trillion, baby.
Let's just make some money. Let's just like focus on that. How are we gonna make money on this bubble? That's what we should be worried about.
That AI robot. Did you see that AI robot? Oh my
Yeah,
gosh.
yeah. So
But it's like Elon Musk. They roll out the promo and this marketing, and the product's not ready. If you actually look into it, like I looked into that, what you sent, Elena, this robot that can like water your garden and
yeah, you got
do
to
your
direct it
dishes.
yourself. I think it's not autonomous or something.
You have to no, it's
Yeah.
worse than that. Somebody else has to peer into your house and direct it, and they blur your face out. So somebody will be watching you all the time because they don't have the training data. Because AI works like you have training and then test data, right? So these things like the self-driving cars, they have to like have some early adopters basically use the tech enough so that the algorithm
teach
it.
Yeah,
So you'll have to have your home privacy invaded for this thing to actually work. And they showed it like even when they had a human operating it, it had trouble like closing the dishwasher, which if you have a dishwasher in your house, I don't have a dishwasher, man. You need a robot to load your dishwasher?
Did you guys ever hear of Moravec's paradigm? It's this thing where if you, and this is, I think it's true to this day, if you put me in front of an IKEA, like to assemble a piece of furniture, and you put a robot, but don't give it the instructions, I can assemble the furniture. The robot cannot. So robots right now, it's called Moravec's paradigm. They can do high complex tasks, but the thing that require like putting an IKEA furniture together just with the instructions, they can't do it. And it's still a gap in like how to train these things because the simple things. I mean, you can figure it out, right? You'll sit there for hours and hours, read it over, but if you don't give that robot the previous instructions of how to do it, it can't just do it and read and do it. It's called Moravec's. They've been talking about that for 10 years now, and I don't think they've cracked it yet. And that's why I think
the crazy thing about AI is that if you train it, like that's how these things work. Like it took it 5 full minutes to take 3 glasses out of the sink and put it in the dishwasher and close
That's what I'm talking. Yeah, they can't
but
do it.
It can't do it. But
no.
If it does that 1,000 more times, it will be able to do it faster than you ever could.
Yeah, but you first have to. That's why you need somebody to show it first. Yes.
How many dishes
you have to train it first. Yeah.
So Moravec's paradox. It's comparatively easier to make computers exhibit adult level performances on intelligence. Whatever. It's a little complicated. So what it says is tasks we consider hard for humans, such as math and reasoning, it can do. But tasks we consider easy for humans, like recognizing faces, walking around, and manipulating objects, it can't do it. It just can't. It's not there yet. And that's why they have companies doing AI labeling, right? Facebook just bought this company, and they're labeling, which means that they were manually training AI to recognize cup and a tree. And labeling is a massive thing because that's what you need for AI to learn. You've got to actually. They can't look at this and say microphone. It just doesn't have a reference if it never saw it before. So anyway,
the simple example when AI was trained, like this is the cat, this is the dog, this is the cat, this is the dog. And then it's okay, and what is it? And depends on how many dogs AI saw in the past. He
That's
will
right.
thinking about, oh, I think
Yeah.
it's the dog.
So
You
my
have
big
to.
my big AI thing is if you can train a cat and dog, but what you can't train AI in is human emotion. You can actually try to make it understand it, but you can't train it on human emotion. Like what if I see something and I think it's beautiful, the AI can't get that. It can know what equals beautiful, but it
Does
doesn't
that
know that.
matter though? Does that
Yeah,
matter if all I want
Emotion,
it to do is vacuum my
it
floor and cook my
not for
food?
that.
I don't care if it feels anything.
When you have predictive algorithms and they're saying that the AI can predict things or think like a human, it can't
yet,
No, no,
not
yet.
no.
yet. I can say
They
it
do
not
have
yet.
advanced neural networks, and that's how these things learn. And,
Faster,
and
faster.
it's
They learn
cumulative.
faster.
So like if enough
Yeah,
robots learn how to drive on this street or that street, when they see the next street that's like that, they can drive safely on it. That's how Tesla is doing their self-driving thing. But it takes a hell of a lot of training data to be able to get
huge.
to that point. Yeah. And for the home robot, the invasion of privacy thing, like
No, no, no,
some
no, no.
guy will
That's
be
yeah.
like they showed it,
Home
some guy
robot.
will have like a Facebook VR thing in your house controlling.
But we already have this cleaner robot, the round one.
It's
They
going
remember
bankrupt.
It's
It's going
going
they
bankrupt.
bankrupt.
It's going bankrupt.
yes, because they have the AI robot, but
I don't know.
still the technology, they remember the path, how to clean your room, and every day, alarm, get up, cleaning, and it's
So if I had, so would my dog. I mean, I'm not like investing 10 trillion in my dog if I had a dog, which I don't have a dog. I mean, who cares? You can memorize my room. It's going bankrupt. Roomba's going bankrupt as of yesterday. Yeah, too
seriously,
bad.
oh my
Yeah,
god. But
yeah.
who will clean my apartment then if they
Uh,
back
and
Yeah.
that's what they're saying about Roomba. Like if they go bankrupt, all the support and all this, it's gone. I don't know.
The tech moves so fast. I can remember it feels like just yesterday that was like, oh, this cool, like breaking edge technology that
Maybe 5 years ago, it was
yeah,
so
5, 10
popular.
years
All
ago.
my friends like bought it. Oh my God, I bought this, I bought
I've
that.
I think you
used it to
get.
clean up. Yeah.
I think you can get robots out of like China, like for like 1/10 the price to clean your house. It's not
That's the thing. That's the
yeah,
thing. This the scale, now
yeah.
it's so cheap. I see them everywhere.